Good morning, active traders, and welcome to our Trading Week Ahead broadcast for today, Saturday, August 21st, 2021. Great to see so many of you here on this bright and sunny Saturday in summertime. The market bounced off the 50 SMA like it did, and like I told my traders in the live room it would, every single time all year long. Every time the markets drop to the 50 simple moving average, boom, it bounces, moves down, bounce, bounce, bounce. 100% of the time, the market's held the 50 SMA. So what that tells us is we don't want to capitulate or short the market aggressively unless we get under the 100 simple moving average. But for now, we're still in an uptrend. Support is 43.50. Let's just keep it simple, right? Support would be the 50 SMA at 43.50, and resistance would be up at that 4,500 all-time high level. So it'll be interesting to see if the market slowly grinds up again or does a drop. So we're ready for it. The other thing that I want you to start paying careful attention to, if you're not already, is the VIX. That's one of the main reasons I trade UVXY2, is not only because I want to make money with it, but I like to be intimately aware of where the volatility in the market is. And the VIX, the CBOE, Chicago Board of Exchange Volatility Indicator Index, the VIX spiked up over 18 last week, Tuesday. And so that was the first time we got a move up in the VIX. Remember, it had been going down here. And remember, I told you guys last week, remember I mentioned in last Saturday's broadcast that the VIX has not gone down this many days in a row without going up. And so that's one reason why we anticipated and correctly traded the move to the upside in the VIX. So do keep an eye on the VIX as well in the upcoming week ahead. Again, 18 is support, and we use 20 as kind of the tight resistance channel. So we want to go short the market / long inverses if the VIX recovers the 20, that's the 200 SMA. We want to go long the market or continue to get back into equities if we get under and hold under the 18 in the VIX. So the VIX is extremely important to look at. From a commodity standpoint, they're shorting oil, and I'm currently long SCO. This is the Bloomberg short crude oil, and I told you guys, not to say I told you so, but I told you so last week. I distinctly remember saying it was a long if it broke over 20, which it did back on Wednesday. And you can see, actually it broke over that. It gapped up a little bit, broke over that on Monday as well. Anyway, they are selling crude. And the neat thing about this chart is if you look at the longer term chart, say the 1 year, we may just be getting started in terms of a bounce here. So if there is continued problems due to COVID and the variants and pressure on oil because people aren't going to be out there traveling as much or being out and about as much if they have to go back into lockdown mode. And so for that reason, the world's oil supply, and for many other reasons too, I mean, not the least of which are oil producing nations and all that have their own agenda. But the point is, if the SCO keeps going up, probably a good candidate for a long. So they are short oil. They're also short gold. And for that reason, I'm long dust, because dust goes up when gold goes down. If you look at the GDX, the gold instrument, you can see it's down, right? So gold has been down and has been selling off since May, from on the GDX side 40 down to 31. So it's at support, but the trend is still down. So we still want a short bias on gold. And so for that reason, when we go long in the inverse instrument, DUST, up at new highs, I'll be scaling in over each whole number. I'll be buying, I'm already in this thing, I'll be buying more over 23 and 24. And SCO, to short crude, I'll be going in again over every $2, so over the 24 and the 26 and 28, with 30 as the ultimate exit target in SCO. Now would be a good time to, and we're going to look at day trading charts in just a minute. But first, let's quickly review these charts that we've been looking at the last couple of weeks. And if any of you good folks have tickers, go ahead and post them now. If you'd like me to pull up the chart and give you my professional assessment as to whether or not I would be trading it in the first place, and if so, some trade ideas. So do feel free to post a ticker or two. Again, I'm not giving trading advice or recommendations. It's all for educational use only. Anyway, NSA looks good, continues to take out new highs. And I'm just going to quickly click through these because there's a lot of charts, and so I want to spend more time on your folks' charts. But here's some that I'm looking at for new entries as well. And these are ones I've been mentioning for you folks the last several weeks, and they've continued to run up nicely. Look at this CUBE chart, Charlie Uniform Bravo ECHO. I can't use that. If I say ECHO, my Amazon device will. Anyway, Cube looks good over 52. FTNT, expensive, but look at that. This guy almost doubled from 170 to 300. Almost doubled in just a few short months. This is another chart. Now I prefer charts under 50 bucks a share, but here's some good role model examples. Remember I'd mentioned Yum for you guys way back when it was at 120 or 122. Now it's way up at 134. Yum Brands, fast food, Taco Bell, and others. Now Pfizer is a special noteworthy chart because it gapped up to over 50 at 50.70 aftermarket yesterday, and you can see it's been on quite the run despite a bearish shooting star up here back on Wednesday. So the Wednesday shooting star is telling us don't go long unless it gets back over 52. In the interim, the fact that it gapped up yesterday up to just under 51 tells me we may well hit that 52 and keep going up. So Pfizer would be one of my top picks for next week for swings. Now, of course, in the live room, what you'll get is very specific entries and scaling and position sizing and trade management ideas. It's mostly day trading, but we also cover swing trades as well. So I do identify charts and specific entries that can help you folks in the live room. Running the live room here over 20 years now. We're in our 21st year, so thousands of people train. If you're not yet a member, why aren't you a member? Join at trademastery.com/live. Just a quick reminder, we do have a summer sale on through tomorrow, and the ticker, not the ticker, the URL for that is trademastery.com/summer, and you can get 3 months for $4.97. So that saves about $100 off the regular rate. So if you want to try that, the summer special is good through tomorrow. Go to trademastery.com/summer. Anyway, back to our program here. EW looks great. These all look great. It wouldn't be on this list if they weren't outstanding charts. Thanks to one of you for mentioning Agilent last week. A really ran nicely for us. It was at a base of just over the 150. Now it's almost 170. A really good pick from whichever of you had mentioned that one last week. Agilent looks good. Another strong chart. Now see, this kind of chart, it's okay, but it's not nearly as good as this kind of chart that has a consistent story. If you want to be more consistent in your trades, potentially, one thing I urge you to do is trade consistent charts. Meaning consistently doing what you want them to do to make money. Now this one, recent buying pressure, yeah, but this is a good example, one that I would not trade because it's not as good as some of the other charts. So B&L's done a quick run up, and this had been one. Now this morning, here's some charts that you folks had mentioned. MRVI, nice breakout here to the 60. Do let me know other tickers if you'd like me to pull them up. I'm gonna switch gears and cover some day trading charts here in just a minute, but do, in the meantime, go ahead and start posting tickers, and in what time we have left at the tail end of the broadcast, I'll pull those up for you guys as well and give you my honest thoughts on those. Anyway, CSR right under the 100, perfect chart, looks great. Amex reasonably good for a cheapie. I like charts like this because they're not 100 a share, and there's a lot of leverage. The guy ran from 13 to 18, so $5 run. And again, I would never in this lifetime be patient enough to hold something for 6 months. For me, 3 or 4 weeks is a long trade for a swing trade, but for 1 or 2 week, that's what I like, is 1 or 2 week trades. Or for those of you who trade weekly options. You know, you can put your strike in a place that, the neat thing about consistent charts is you can visually price out where the optimum strike would be if you're doing weekly, you know, let's say Friday expirations and you're buying weekly calls in these guys to go up. You know, you just basically draw the line and draw the channel within which it's trading and forecast out 5 days where that put us. For example, 52. So I would use, say, a 52 strike on Kroger for weekly with an option expiration on the 27th. So if you're trading weekly options, you can also look at these guys. And that's kind of a slower chart that one of y'all had mentioned, but nice steady uptrend. So we'll see where it goes. Now let's take a look at a few day trading charts. This is one of my favorite chart patterns. We're waiting for a 2-day high breakout above a whole number. And this is one I had mentioned for my live room members yesterday, MARA, and it ran all the way from 32.5 up to 36. And our goal is to get a point or so out of the range in the middle there. We don't expect to buy the bottom and sell the top, but we can get a piece of the middle. That's a good thing. And you can see Marathon looks good. That's one of the Bitcoin related stocks along with Riot and Coinbase that we covered. Kind of a cheap chart that kind of had a noisy move up, but a good move up is FLGC, going from a pre-market low of around 9 up to just under 13, so a $4 run. Now, again, this kind of chart I don't like nearly as well as something like, say, Macy's on Thursday, because I like charts that have nice clean versus up and down breakout. So nice clean open range breakout. And this guy ran all the way from 19 whole number region up to just around 22. So a $3 run in Macy's. Another quick tip again is that Mondays and Fridays are usually the worst of the days of the week to trade. And this is why. You can see a nice big range on Thursday, but less than half the range yesterday and Friday. So if you're getting stopped out, one thing I urge you to do is focus your energy on the Tuesday, Wednesday, Thursday entries using the best of the charts and develop a trading strategy that makes sense for you with charts that have the best breakout potential. Pfizer gapped up to right, way up here. So where my epic, cool looking blue cursor is pointed, that's where Pfizer is. It was last night after the market. So there's some good news on Pfizer. So it's out of this noise zone. The noise zone on this is 48 to 50. The box trading range to avoid is 48 to 50. It's way up here at 50.7. So I believe 49 or so would make sense for a initial trailing stop for half the position. I would sell. So if I bought 57, let's say I buy 51. So let's say I buy 51.20. I'd put half the trailing stop right under the 50 and the other half right under 49. Another good chart has been BT. It had a good day a few days ago. Reasonably good volatility, but again, we like charts that have continuous up plays and good relative strength. All right, wow, lots of tickers. Thanks, folks. Let's see what we've got. Hey, Steve, let's see. Again, I'm not making trading advice. It's just my own patterns. Would I trade it in the first place? Nope. We like charts that have consistent uptrends. CWE. It's very difficult to be. I like the recent strength, but if I were to trade, it'd be over 31.50 with a hard stop on a swing trade, I'd say just under the 30. Let's take a look at Square SQ. I would not trade that. Let's see, CLDX. What I'm doing now is typing in the tickers of traders of you folks out there that are asking about things. I like the setup over 50. If it breaks 50, maybe good for a play. And we looked at BTU earlier. It's an okay uptrend, but not a very clean one. So I would not trade that. Let's see, AVTR. Paulie's asking, yeah, that's a great chart, thanks. That one I would trade myself over 40, right? Yeah, we never buy the 9 because the 9 is often where things stall, like this did last week. But if it's able to climb over the decade value over 40, and for example, I would, not a trade recommendation, but I would likely enter this if it breaks anywhere over, say, 40.2 or 40.4. And it climbs up at least a quarter point over the 40, a good steady uptrend AVTR. So yeah, it's a good chart. See someone asking about NVIDIA. Chip makers have been volatile. The challenge is they've been up and down the last month or so. So yeah, if NVIDIA breaks the 212 or so, maybe worth it for a trade. But I don't like the lack of consistent strength in July and August compared to, say, that chart or this chart or this chart. But yeah, it's a good breakout. Let's see, lows. That might be, if you day trade expensive stocks, it might be okay for day trading, but I would not swing trade it. If we look at some of our kind of blue chip ones that would be good candidates for investing, I'd prefer Costco, for a retailer. So Costco is really good. Nothing to hate about this chart, right? It ran from just over 300 to 460, so huge run. See how nice Costco is. And again, you don't have to trade thousands of shares of these guys. You can still just trade small size because they're expensive, or even fractional shares for some instruments. But don't trade things just because they're a brand name and you like them. I mean, as much as I love companies like Disney, its chart is terrible. That's a very uncertain chart. It'd be a short under 165, along north of 190, but I wouldn't trade it at all right now because it's going sideways. So which one do you think is better to trade, Disney or Costco? I'd rather go to Disneyland than go to Costco, but in terms of the trading, I'd much 100 to 1 much prefer COST to trade. Wow, lots of tickers I got. Thanks. Let's see, Marvell. Let's take a look. It's up, but it's uncertain. Again, you want charts that if you were to go back in time and ask yourself, would I have A, made money with it, or B, gotten stopped out? It's half and half. This one, though, it would have been hard to not win. It would have been difficult to not win swing trading Costco. The question, the Caterpillar looks pretty terrible. Microsoft, all right. So what I'm doing now is entering tickers that you folks out in the audience, that's a great looking chart. Microsoft is terrific. Anywhere over 310 makes sense for MSFT. Let's see, Home Depot. Let's take a look at old HD. Nope, which one would you rather trade, that one or this one? And look at the charts like an eye test. Which one is sharper, A or B? Which one is clearer? Which one would have made for a better pair of glasses, or sharper, easier to look at? Let's see, someone's asking about Pool, P-O-O-L. Yeah, that's a decent chart. But for 500 a share, I'd rather, it's a good chart, but that's a great chart, right? Again, with limited time and limited capital, as much as we'd all like to trade it all, especially for the more expensive instruments, you can't, because there's limited capital and a limited time. Now I like charts like this that are under 50 a share. The challenge with the cheap charts is you very seldom see consistency in, the under $10 charts where they run up week after week and month after month. But if you're going to build a good swing trade, or a position trade, you want charts that have reasonably good strength and would have minimal pullbacks. That's one of the criteria that you want to set for yourself as a trader, especially if you're swing trading, is which charts have the most consistency. Because if your experience is anything like mine, if you trade inconsistent charts, even if they're a favorite, that's where you get into trouble. Where I get into trouble, at least, is I overtrade things that I'm comfortable with and I like. That's not the reason to trade it. You want to trade things that are consistently profitable over the last several weeks, going up week after week without any sign of a pullback. Let's see, traders asking about AMD and ZTS. Let's take a look. No, that's terrible. Someone's asking about NEE. Yeah, good momentum in that guy. I like that one north of 87. That's good. So you folks have come up with some good charts. So these are reader's choice charts or trader's choice charts from you folks today. NEE, Microsoft. I pulled up Costco. That's a great chart. You guys have mentioned AVTR. For an under $50 one, this one's really good. I like the reasonable price action and the strength. It's not too volatile, and it is consistently going up for the last several months, so that's always a good thing. Really what you're looking at doing is strategizing for charts that make sense to trade. And one thing that you can do to help with that is if you pull up the day trading chart, the interval chart, pull up 10 days worth of price action, that'll often give you, I used to always use 10-day charts to help with swing trading decisions because that's around the round trip time frame that I like to trade, is around 10 trading sessions, around 2 weeks, right? So for swing trades, I like 2 weeks. And often it helps to use the 10-day chart in addition to the longer term 3-month or 6-month chart because it gives you a different picture. Let's take a look at your folks' picks in that context. And sometimes it tells a different story about relative strength and whether it's a good chart. That one looks great. Microsoft looks great. That looks okay. Thursday had been a gap down, but a recovery. That one looks pretty terrible. That one looks terrible. That one looks great. That one looks really great. I like that AMX. I may take a shot at that myself. Because look at that, a nice steady uptrend. You could have just thrown darts at this all the last couple of weeks and been making money daily on this thing. Potentially. That one, the volume's too thin. That one's, so that's another brush you can take at these is qualify it. The trick is, or the strategy, not the trick so much, the tip is look at both, say the 90-day chart or the 6-month chart, and then also put it in context of the 10-day chart and qualify it that way. That's a really good way to narrow the focus. So what looks good on this is what I'm illustrating for you is what I call, or what the trading industry would call, multiple time frame analysis. So the charts that look really good on the longer term interval, many of them don't look really good on the 10-day chart basis. So the ones that do are making our I'm gonna maybe regret this because those were some really great charts and they're permanently deleted now. But now, aha. Set this back down to the 2-day. And that's how you use what's called multiple time frame analysis to validate charts. So now using a multi-time frame analysis approach, we have the best of the best. So do you see how I relatively quickly cut the list of maybe an unmanageable 15 or 20 tickers down to 8, right? That's a much more manageable list. So this is qualified now on both the 10-day chart basis as well as the 6-month chart. Yeah, I like that. So I permanently deleted all the other tickers, and this is our short list. So again, for an intelligent rules-based approach in trades, and again, this is a pretty deep dive into the best of the swing trade charts. Today in the live room, where it's kind of like the opposite. It's like 80% day trading charts and 20% at most swing trading charts. So it's mostly intraday trades, but we also cover swing charts as well. And I provide specific entry tips, trade management on risk management, and the rest of it. But does that approach help? Is that a good way to narrow the list down from the 30,000-foot view down to you're right in front of the best charts? And that's how you produce a list of potential winning charts each week. So Cube, Pfizer, Agilent, AMX, Kroger, Costco, Microsoft, and NEE all look really good. Hey, thanks, Wendy. So I've deleted out the other charts. Let's see, a question from a trader. How do I know, like Costco has it run too far and wait to see if it pulls back? It's only, how to say, the thing to think about in terms of if it's already ran too far is those are charts that have near vertical runs up, like Pfizer recently, or things that have run up very sharp angle breakout. Those I will still trade on new highs, but with smaller share size on the front end because I want to minimize my risk. Now things that have a steady, 45-degree angle breakout, I will often trade more aggressively with larger shares because the upfront risk is lower. So yeah, but a smart question. Basically, when we look at the slope of the line of the breakout, and if it's the closer it is to 45-degree angle, regardless of how far it's gone, the least I worry about it. But the closer it is to a straight up, recent vertical climb up, near straight up, the weaker the breakout is. So I'm more cautious with those. Well, thanks, traders saying, hey, Margaret saying thanks, Ken, it really helps to filter them down. Yeah, because otherwise you end up with a list that's too long. So if you have a nice short list of great candidates, that really helps us focus. And that's one of the things we can all benefit from. Question from William about opinion of Bitcoin. I don't trade Bitcoin. I don't trade things I don't understand. So I think it's a bunch of hooey and it's all made up and it could just go away and the world says, psych, ooh, Bitcoin's now worth nothing. It was made up to begin with. So I'm not a fan of Bitcoin. I don't trade what I don't understand. I understand Microsoft. I understand Costco. I understand Pfizer. And whatever daily gap runners we have, and the ETFs that we trade. But personally, I'm not a big fan of like trading Ethereum or that kind of thing. So I like to trade stocks. That's what I do. Anyway, thanks so much for being here. I appreciate it. We're going to wrap up. We're just about our closing time. So you guys have had some outstanding charts to cover, and that's the short list. So we'll revisit it next week. And again, in the meantime, we do have our summer special at trademastery.com/summer. And that's not on the, it's not announced on the homepage of the website. It's for those of you who are my subscribers and all that only. So anyway, if you're interested in working with me, I'd love to have you there, and it's really good value because you get, you know, dozens of hours of training and answers to your questions. Echo, stop. Anyway, we're out of time, so you guys have been great. For answers to other questions, feel free to ask me in chat on Monday. Go ahead and join this weekend, and you have my word. You know, you can join as a trial member if you haven't already done so at only 29 bucks, risk-free for a couple of weeks. And if you're returning, it'd be great to see you guys back. Now is a really good time to be working with me as markets are taking on new all-time highs. And as a real trader, I can share with you at least what I'm trading and give you some thoughts on how to manage entries and exits step by step. So hey, take care. Hey, thanks, Bill, saying Super Saturday. Does it again. Thanks, and hey, thanks, Bill. Appreciate your tickers. They were good as usual. So you guys have been great. Thank you so much for being here. I sincerely appreciate it. We're going to wrap up, and that's all, folks. So if that impresses, and it should, hopefully, I mean, test these tickers out and test these approaches out. Certainly be great to see you as part of the live room. We go over intraday charts as well as swing trading charts 5 days a week, Monday through Friday from 9 till 10:30. So I'll see you there. Go ahead and join now at trademastery.com/live. Or for that summer special, what I want you to do is go to trademastery.com/summer, and that'll take you to the sale page. So take care, and I'll see you guys next time. Bye for now. And trade smart out there.